Hey, what's up guys? John here. What Fannie Mae just said about the housing market says everything. It's very, very clear. I believe we're going to be stepping into exactly what they've said. Over the last 6 months to a year, I've been saying that we're going to be stepping into a correction. The time to sell real estate was probably at the end of last year when I was selling. I believe that we're going to be stepping into a huge, huge opportunity to buy distressed real estate, to buy distressed opportunity, because there's so much leverage in this system. People are so leveraged. No one was taking into account rising inflation, the massive job layoffs that are occurring at over half of all employers. We're starting to see some real pullback from employers about what's really necessary. We're going to see a lot of people lose out big time, but we're going to see a lot of people make a ton of money. Look at 2008, 2009. When everything crashed, there was a lot of people that won big. Also, a lot more people that lost big because they got very, very excited with all the access to liquidity. Everyone was making money in real estate. Seems familiar, right? Take a look at this. These 183 housing markets could soon see price reductions up to 20%. 20%. Every quarter, Moody's Analytics assesses whether local economic fundamentals, including local income levels, can support local housing prices. At the latest reading, Moody's Analytics finds 183 of the nation's 413 largest regional housing markets are overvalued by as much as 25%. That includes markets like Boise, overvalued by 72%, Charlotte, 66%, and Austin, 61%. The vast majority of these significantly overvalued markets are concentrated in boom towns in the Mountain West and Sun Belt that benefited from the pandemic's work from home trend. And 72% of recent homebuyers have regrets about the purchase. As the market cools, these steps can help you avoid disappointment. But here's what Fannie Mae just said. They see dark days ahead for the housing market. This just came out yesterday. It will get worse for the housing market and the mortgage market before it gets better. And that's the takeaway from the group economists at Fannie Mae, who slashed their forecast in 2022 home sales this week. Housing remains clearly on the downtrend and has been for several months now due to the combined effects of outsized home price increases and the significant rapid run-up in mortgage rates. Fannie Mae's chief economist, Doug Duncan, said in a statement, Fannie Mae's economist and strategic research group expects total home sales to decrease 16.2% in 2022, a further downward revision from July's projection of 15.6%. The latest forecast also projects total mortgage origination activity at $2.47 trillion in 2022, down from $4.47 trillion in 2021. The mortgage market is projected to slip even further in 2023, dropping to $2.29 trillion. Now, I believe this is not bad news. Not bad news for the smart and savvy investor that's awaiting great opportunity. When this opportunity comes, I believe there is going to be certain pockets where you're going to be able to get incredible deals, incredible deals. And it's up to the smart and savvy investor to be prepared for those opportunities and know exactly where and how to invest in those opportunities. The brutal housing market has already tested the business models of mortgage lenders and will be a while before conditions improve. In the second quarter of 2022, non-bank mortgage lenders on average lost $82 per loan, according to the Mortgage Banker Association. Combining both production and servicing operations, only 57% of companies in the mortgage industry reported were profitable in the second quarter. 57% were profitable. On average, independent mortgage brokers generated $705 million origination volume in the second quarter, down from $808 million in the previous quarter. Total production revenue for independent mortgage brokers, which includes fee income, net secondary making income, and warehouse spread, decreased to 337 BPS in the second quarter, down from 350 a quarter prior. On a per loan basis, production revenue declined to $10,855 per loan in the second quarter, down slightly from $10,861 per loan in the first quarter. Many lenders have been cutting hundreds of thousands of staffers amid the dip in origination volume. Fannie Mae forecasters said that despite mortgage rates settling below 5% range over the past month, recent incoming data has led them to revising the home sales forecast, notably because of a drop in new home sales. New home sales sold at an annualized pace of 590,000 units in June, the lowest sales pace since April 2020. ESR Group, researchers now expect new home sales to finish the year at 632,000 units, down from 668,000 last month's forecast. New home sales are now projected to fall 18% from last year, while existing home sales are expected to fall by 16% in 2022 to 5.143 million. Fannie Mae's ESR Group also said it expected real gross domestic product growth for the full year of 2022 and 2023 to remain flat from last month at 0% and negative 0.4% respectively. The continued expectation for real GDP growth will be a negative beginning in 2023 due to the combined effects of tighter monetary policy weighing on business and residential investment and still elevated inflation weighing on consumer spending, Fannie Mae wrote in a report. The ESR Group wrote that it expects inflation to tick up gradually, ending 2022 at 7.2% and 8.1% by the end of 2023. I think inflation could surprise people. I think it could get out of control if we just pay attention to what's happening all over the world. Housing market in much worse shape than the Fed wants to admit. I'm curious, what do you think? Do you think we're going to be seeing this situation continue to evolve? If we really look at how much debt there is across mortgages in this country, we look at what the smart money is doing. When I say smart money, look at private equity firms. Look at the firms that are really controlling tens of thousands of units, hundreds of thousands of units. What are they doing? They're raising capital. They're raising cash. We look at Starlight Capital. What are they doing? They're looking to unload 3,000 houses. Look at Zillow. They were unloading properties, 6 months ago. People are looking to dump tons and tons of inventory because I believe they think there's going to be more distress to come as interest rates rise, and these home builders all across the country are looking to hopefully unload their inventory before the housing market crashes. I think that they're loading up cash right now. They're getting ready to pounce on these markets when the distress starts to come. I think the stress is going to be coming in a big way. Some people say, John, you're fear mongering or you're trying to scare people. No, this is a finance channel. I talk about money, I talk about business, I talk about investing. Just look at the writing, it's on the wall. The writing on the wall indicates that we're going to be stepping into some really big problems. There's no way around it. And through those problems, you can make money, you can invest, you can do things when things start to get a little bit more concerning. Right now, it seems like a lot of people are in denial about where the housing market really is, where we really stand as a country. We're going to be stepping into this opportunity, I think, much sooner than people anticipate. It would not surprise me to start to see more and more panic and fear come in Q4 and Q1 very soon. Next 90 to 120 days, we could start to see some real panic. I'm not trying to predict the market. I'm not trying to say that this is when everything's going to crash. But what I am saying is we're in the selling season right now, and we're seeing the declines. As we start stepping into the winter season and holiday spending starts to kick in and utility bills are rising, we're going to start to see these problems kick in, and people aren't going to be able to anticipate just yet how bad things will be. Especially student loan debt forgiveness is going to expire unless it gets extended again in end of December. So all these new bills are going to be coming at the same time of all new layoffs will be coming across all careers. What do you think about this? Drop your comments below. Do you think Fannie Mae is right on the money here? Do you think we're going to be seeing like what they say, which is dark times ahead for housing? Do you think we're going to be seeing the dark times ahead? I would think so, considering that Fannie and Freddie own, roughly 60% of all mortgages in this country. They're the ones saying it. It would be pretty foolish not to listen to it. The data is suggesting that they are right on the money. Curious, drop your comments below. What do you see? Subscribe here. Subscribe also on my second channel. If you need help fixing your credit, you want great credit. You need great credit because you want to buy properties, and when housing markets crash, what ultimately happens is lenders tighten up on their lending, and they are much more selective of who gets loans. If you need help fixing that credit, go to cashnow.video. That's cashnow.video. If you want to get on the YouTube grind with me, go to cashnow.video. If you want to learn how to invest in real estate, you don't know where to invest, but maybe you have great credit, you have cash, you're getting ready to pounce on distress opportunity, visit cashnow.video. Subscribe here on my second channel, LinkedIn, Twitter, Instagram, and TikTok up in the banner, and catch you guys in the next video. If you're interested in being sponsored on my YouTube channel, visit cashnow.video/sponsor and fill out the application.